This is Financially Fit Radio with Corey Sickles from Safe Harbor Retirement Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Corey provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is Financially Fit Radio with Corey Sickles.
Welcome to another episode of Financially Fit Radio. I'm Corey Sickles, representing the team here at Safe Harbor Retirement Group and Wealth Advisors. If you'd like more information about the insights on today's show, don't hesitate to reach out to us. You can also give us a call at 614-760-0670 or visit us on our website at safeharboroh.com. And while you're exploring our website, be sure to navigate to the radio page. There you can catch up on the previous shows and even subscribe to our program through popular podcast platforms like Amazon Music, Google Podcast, or Spotify. For engaging visual content on various financial subjects, feel free to drop by our YouTube page as well. Just search for Safe Harbor Retirement Group. Now, we're here to address any inquiries you might have or to arrange either an in-person or virtual meeting. And remember, all of our meetings are complimentary and carry no obligation. Your financial well-being is our priority, so let us know how we can assist you the best. Today, we're going to talk about how you really can become more efficient with your investments. You know, this is really essential for maximizing the returns and minimizing your risks. And we're going to, kind of dive into some of the topics that's going to help you be able to become more efficient with your investments. But before we dive into that, let me introduce to you my co-host this week and every week, and that's Tony Shore. Tony, how are you today?
I'm doing great, Corey. Great to see you, and great to be here with you on the show. I just took a trip over to Cleveland to see the Rock and Roll Hall of Fame. I don't think I'd been there since it opened, and they were having Member Appreciation Day, and so I got the yearly membership and got to see some really great things and experience an amazing day over there. Gotta get it. We got in early. I got to see some unique artifacts that are for members only, and it was just a blast. And then I went and saw kind of an odd band, Mars Volta, at the old Agora, the historic Agora Theater there. Cleveland has a lot of old buildings in that downtown, a lot of beautiful old banks and buildings that they've restored. Pretty fun.
Yeah, it's actually it's a great town to go visit. So I think it's always got a little bit of a bad rap.
It has,
but it's a great town, and I haven't actually been up to the Rock and Roll Hall of Fame in a few years, but it's something that I know when Melissa and I went up there, we enjoyed that as well.
Yeah, they change it up every couple of years.
Sure.
With new exhibits and things, so that's really cool. How have you been? You've been doing good. Did you get a chance to take a break from work this past weekend?
Yeah, I was able to get out on the golf course.
Nice.
Fall's the best time of the year to be able to play some golf, I think.
It is.
And, September, October is really the best time to be able to get out there and play. But, we're busy here in the office. Fourth quarter's right around the corner here, not too far away, which is when we do get really busy. And, of course, one of the things that we're always discussing with clients is their investments, right?
Right.
And, the one thing as we kind of go through today's topic, Tony, I just think, there's a lot of ways to become more efficient, with your investments, and we're going to kind of dive into that topic. And I really think one of the first things that you really need to be able to do is kind of set clear financial goals, right? Before you start investing, you really need to define your financial objectives. Are you saving for retirement? Are you maybe saving for a down payment on a house or a child's education? But knowing your goals will help you tailor your investment strategy accordingly. Of course, our main focus here at Safe Harbor is being able to save for retirement. And I just think it's something that everybody should kind of, focus on. We've talked about, one of the things I always get asked is, how much should I be saving for retirement, right?
Right.
And really you should be in that 10 to 15% of your whatever your pay is. You should be able to put that away on a monthly or per paycheck basis. I think it's going to set yourself up, long term to be able to have a retirement that you want. Let's face it, today, unless you're grandfathered in, there's no pensions. So really, what we're really talking about is Social Security, and who knows what that's going to look like, 10, 20 years from now. But it's really going to be your retirement's going to be based upon how well that you saved, for your nest egg. And I just think sitting down with an advisor, seeking professional advice is also something that most people out there should do. A lot of people are unsure. What should my investment strategy be, right? So one of the things that an advisor is going to be able to do is personalize. Everyone's different, so we're going to be able to customize that solution for you. And I just think it's always good to be able to work with an advisor, because we're going to show you. Here's the nice part. One of the things is the tools that we have is we can show you where you are today. And whether you're 5 years, 10 years, a year away from retirement, or even 20 years away, based upon what you're doing today and your risk level, we can kind of show you what it's going to look like by the time you get to retirement. And are you going to have any issues with meeting some of your income needs?
Right. Yeah, and I think a lot of people, that concerns them, but they don't go into it with the plan, or they put off making these decisions, or they freeze up. They don't know how to figure out, how much should I be putting away each month? How am I going to know I have enough to last me my lifetime? And you're right. The pensions have really, I say the pension has gone the way of the pension. It's
Sure.
dead unless you're a government employee.
Or a teacher, or
very few people have pensions these days. So most private companies don't offer them. Some allow you to be grandfathered in if you already have one, but even some companies are stopped. They said we're no longer doing any pensions moving forward. Some actually had to take back some pensions because they couldn't pay for them. So that's not good. So you want a plan in place. And like you said, I love, Corey, that, and I know we harp on this every show, but for our listeners out there, you have to understand that your situation is not your neighbor's situation. Everybody's different. It's like a fingerprint. We're all unique, and we all have unique circumstances. And that's why you need to work with a financial professional who's going to get to know you and your spouse, your family, what your needs, concerns, cares, goals are, because everyone is different. A buddy at work, or your neighbor or your brother-in-law, they don't know what worked for them, or what they like, or what they've heard might not be right for you.
That's exactly right. And once you kind of determine how much you're going to save and what are you saving for, really the next thing you have to kind of look at, Tony, I think this is one of the biggest things, and that's at your asset allocation, right? What's your risk level? And, for any of our listeners out there, you can always go to our website. At the very top up there, you can actually take our risk assessment. That's going to give you a score. Then once we sit down with you, based upon that, then we can kind of show you the way that you should be allocated. How much money should you have in stocks? How much money should you have, in safer type of investments? Yeah. And one of the things that we do with our clients is we review that again on an annual basis, right? Things change. As you get older, you're going to find out that you're going to become more conservative with your investments.
Yep.
So it's so important to make sure that you're allocated the correct way. When you're younger, you have time for stuff to come back. You can be more aggressive. But, if you're nearing retirement or in retirement, the one thing you don't want to do, just like in 2022, right? You don't want to experience a 20% downturn in your overall portfolio. So asset allocation is key. And of course, you also want to have a diversified portfolio too, right? You want to be in stocks, you want to be in bonds, maybe some international. We have some different types of products out there to be able to diversify your portfolios as well. We have a great chart that we show to our clients and prospects, and you can pick any type of category that you want. Large cap, small cap, gold, silver. You can international. Every year, one of them does a little bit better than the other. So by having a diverse portfolio, you're going to be able to take advantage maybe when emerging markets does well. And then the following year, value or blue chip stocks go well. And then the following year, it's growth stocks. So by having a diversified portfolio, you're going to be able to what I would say is, get some upside, during the years that some other things aren't doing as well. And you might lose a little bit of money during those other years, but your other investments are going to kind of be able to take control of or help you produce some type of results long term as well.
Yeah, and you do have to watch out. And your time, what you're talking about, Corey, is time horizon, right? For those younger, you mentioned they have more time. I'm in my mid to late 50s. We're not going to get into that, but as I get older, you're right. I get more conservative, and you have to look at how you're invested and where your money's at. And the market fluctuates; it goes up and down. We have down years like 2022. We have up years. This year so far, we're up overall. So I think that's important to note. Time is your friend with the market, but you don't want to try timing the market, and you need a solid plan.
Yeah, and by doing your asset allocation, your risk tolerance, now it's going to give you an opportunity to regularly review and also rebalance your portfolio, at least on an annual basis as well. One of the things that we do, Tony, at Safe Harbor Wealth Advisors is we have managed portfolios.
Yeah.
So we're constantly rebalancing them, usually on a quarterly basis. But sometimes it could be, based upon market conditions, it could be a little bit more often than that. But you want to be able to rebalance. The one thing that you do not want to do is you don't want to try to get into the market and out of the market or try to time the market. Timing it's too difficult to try to time the market.
Yeah.
You have to think of it as more as a long-term investment, you just don't want to get in and out, move stuff around. You just want to make sure you have a diversified portfolio.
Right.
Avoid timing the market. It's too difficult to be able to do or predict any of the market movements. And here's the key. You want to stick to that investment plan. So if you're working with an advisor, we're going to be able to take that emotion out when the market is doing good and when it also is doing bad.
Sure. Yeah, and that's true. You want to take away the highs and lows and the emotions of it, so you make better decisions. I think people, they say, I forget, but a majority of people end up, if they try to handle their stocks or their portfolios on their own, they end up buying high and selling low, right?
They do.
Yeah.
When you get emotionally involved in it, you're going to probably do things that you shouldn't do, and that's why it's so important. I think truly to be able to work with an advisor, because we're going to be able to take that emotion away from you, and we're going to be able to manage that. And we're looking at the long-term investment, not short-term investment solutions as well. If you would like more information about today's show, don't hesitate to reach out to us. We're here to address any inquiries you might have or to arrange either an in-person or virtual meeting. And remember, all of our meetings are complimentary and carry no obligation. Your financial well-being is our priority, so let us know how we can assist you the best. You can give us a call at 614-760-0670 or visit us on the web at safeharboroh.com to schedule that complimentary no obligation meeting with us. Well, Tony, we've been talking about how really you can become more efficient with your investments. We talked a little bit about being diverse in your portfolio a little bit earlier. And really what we're talking about there is how your investments are actually invested. But I think one of the most important things that you can also do is make sure you're diversified from a tax efficiency standpoint as well. One of the things that I see more and more often is majority of the people that come through Safe Harbor here have the majority of their money in IRAs or 401ks or thrift savings plans or 403bs or any type of what we call a qualified or IRA account. And really what we're talking about there is, yes, you do receive financial tax relief today, right? Because it goes in, of course, tax deferred, it grows. But one of the things that you're really doing is setting yourself up to be able to pay taxes for as long as you live. Because even though it grows tax deferred, when you retire, now it's going to start coming out. It's going to start coming out, and you're going to have to pay taxes on that in retirement.
Yeah. Taxes always play a part, don't they? And we all want to minimize that tax burden, especially in retirement. And people think, well, I'm not going to have to worry about taxes because I'm not going to be working. But you would be surprised. Most of those retirement accounts are tax deferred, so you pay taxes on anything you take out of it. Principal earnings, it's fully taxed, so you have to watch that. And even your Social Security can be taxed.
That's correct. Right? You know, if you really think about it, if all your money's in an IRA, and let's just say you've done a great job and you have $1 million in it, you really don't have $1 million because now when you take that money out, you have to pay Uncle Sam. So there's a lot of companies out there now, which means you actually put money in, per paycheck after you paid your taxes. But the unique part about that, Tony, is you're not going to pay taxes on that, in retirement because it's going to grow now tax-free. And then when you take it out, it's tax-free as well.
Nice. Yeah, so you have to have a tax-free bucket. You've talked about the various buckets for income and money in retirement, like you mentioned earlier. That's asset allocation. That's what we call it.
Yeah.
And I know you've talked a lot about that, but that is critical. And that's a big part of what you do for your clients is make sure they've got some money in that tax-free bucket with a Roth, or there are different types of insurance products that can be tax-free, some types of life insurance. So all of these things need to be considered, and it depends on somebody's individual situation, doesn't it?
It does. And, even if you can save even what we call a brokerage type of account, which means it's after taxes. And what the easy thing for a lot of people for our listeners maybe to understand is instead of putting it into a bank where you've already paid your taxes and you're building the savings up, now you can also have that type of account where it's a brokerage account, but it's going to grow, but you're only going to have to pay taxes on that growth. So it's not fully loaded from a tax standpoint. So if you can have a little bit of money in your IRA, money in your Roth, and money in a brokerage, or maybe even money into a life insurance policy that builds cash value, now you're going to have a tax efficient, diversified portfolio that's going to benefit you. When that time comes when you retire and you have to start taking money out of your investment account.
That's another great one. Now, when people retire, they have a lot of questions, and I don't think they know and most people wouldn't even know asset allocation. What do you mean by that? And it's where your money's at. And sometimes it's, when you need your money more than how much you have, isn't it?
It does. Give you an example. If you're putting all your money into an IRA and then all of a sudden you want to potentially buy a house or maybe you have to pay for some other type of needs, if you're not 59 and a half, you could have issues with that, right?
Right.
So that's why it's so important to be able to have that emergency fund or a brokerage account where that cash is liquid to you and you can use those for those type of emergencies as well. So, when you sit down with an advisor, we're going to put together a plan for you to make sure that you are diversified because liquidity is a big issue. And I think we found that out in 2020 with COVID. If you were living paycheck to paycheck or you had all your money in IRAs and things like that, you actually had to pay taxes on that. And it's just something that you don't want to do. And, I've talked about it so many times on the show, Tony, but you also need to make sure for our listeners out there to have a 3 to 6 months worth of an emergency fund in case you do lose a job or you have a medical condition or your air conditioner goes out, or there's so many things that can actually, your car goes dead, right? There's so many things that could actually happen where you might need money. So that's why it's so important to have that emergency savings fund.
Yeah, you never know. I mean, we had that as my car, one of the axles cracked, or there was a piece on the axle that cracked. And so, that's $800. Get a set of 4 new tires. That's $1,000. So, where's that money coming from? Or even more, it could be even more expensive. Your refrigerator could go out. And those are very expensive. I don't know if you've looked at the price of new refrigerators lately, Corey. We were looking at them. Really expensive.
Everything seems like it's pretty expensive, Tony.
That's true.
And that's why it's so important too to also maybe automate your investments, right? if you're putting money into a 401k at work or a Roth 401k at work, it comes right out of your paycheck. But even if you're trying to save up for an emergency fund or maybe contribute to a Roth IRA on a regular basis, automate it. Just so it comes out of your bank account, on a monthly basis. It's going to allow you to become more consistent with your investing, and you're going to be able to take advantage of that dollar cost averaging. And really, what I'm talking about there is the market is always high and low. And if you're contributing, on a monthly basis, there's going to be some months you're buying high, and there's going to be some months you're buying low. So overall, it's going to be able to help you from a dollar cost averaging or from a return standpoint as well.
Yeah, and dollar cost averaging, people, might be thinking, what's that? Well, that's how you get in and out of the market by dollar cost averaging, right?
Yep,
that's
exactly right.
That's important, and that's why retirement plans are so great, like 401ks, because you're constantly putting money in to the market and putting money into your portfolio. So you're evening it out as the market goes up and down. You're putting a steady amount in. You're not withdrawing when it's down. You're not putting in all your money when it's up. It's constant. Isn't that basically what dollar cost averaging is?
It is. It's going to be, yes, that's exactly what it is, Tony. And, the last thing I kind of want to talk about is, one of the things that we really try to do at Safe Harbor is we want to be able to educate our clients.
Yeah.
Just about just everything financial in general, right? So, one of the things that you should always be striving to do is educate yourself about investment strategies or financial concepts. We're really, I think if you work with an advisor, a good advisor is going to be able to educate you every time that you come in and meet with them, or more importantly, things come up, right? Now you actually have someone to go to be able to ask questions. So I pay my house off early. What should I do about my, if I have a loan or, college loans? I'm trying to save for education, but I'm also trying to save for retirement. Those are real life issues that we're going to be able to sit down with you and kind of educate you on what we actually think is going to be the best solution for you. Everyone's situation's different. And I just think by trying to educate yourself, working with an advisor, it's going to put you in a better situation as well. And the last thing I do want to talk about, Tony, is this. Investing is a long-term endeavor. So you have to be patient, right? You need to really avoid the temptation to chase those short-term gains or panic during market downturns. Patience is often rewarded in it's just like you always, you used the example the other day about when's the best day to plant a tree, right?
Yeah, 20 years ago.
20 years ago, right? You'll be amazed what it actually grows to 20 years later.
Yeah.
So be patient with your investments. Do it on a regular basis. And we're really here to help and guide you to become more efficient with all your investment strategies.
Yeah. Yeah, and I think that's really important. Well, it's been a great show today, Corey, but we're out of time. Let our listeners know one more time how they can get a hold of you.
Yeah, for our listeners out there, just give us a call at 614-760-0670. Or you can always visit our website at safeharboroh.com. Remember, all of our meetings are complimentary. There's no obligation. If you have a financial plan, we can provide that second opinion. And if you don't have one, we'll put one in place for you. So just give us a call again at 614-760-0670, or just visit us online at safeharboroh.com.
All right, and that does it for today's episode of Financially Fit Radio.
Join us next week for another episode of Financially Fit Radio.
Thank you for listening to Financially Fit Radio. Don't pay too much for taxes or retire without a sound income plan. For more information, contact Corey Sickles at Safe Harbor Retirement Group. Call 614-760-0670 or visit their website at financiallyfitoh.com.
All matters discussed during the show are for informational purposes only. Each individual situation may vary, and the opinions expressed here may not apply to everyone. Materials presented are believed to be from reliable sources, and no representations can be made as to its accuracy. All ideas and information should be discussed in detail with one of our qualified representatives prior to implementation. We are not affiliated with or endorsed by the Social Security Administration, the Federal Medicare Program, or any other government agency. Calling this number will direct you to a licensed sales agent.